There we go. All right, good morning, everybody. It's just a little bit after 6:30 in the morning, Wall Street time, 3 hours before the stock market opens, and about 2 hours and something minutes, or less than that, away from ADP, which is the big event of the day. Anyways, it's time to get your macro on. Welcome to QuantBox Live, where you uncover the best fundamentally based investment opportunities across the globe. Forex, futures, yeah, stocks, bonds, yeah, crypto, yep. Oh, well, not yet. It's soon, maybe. Shh. Anyways, hey, my name is Wayne McDonald. I'm the founder. I'm also a Harvard trained economist, so I know a few things about some stuff. Very cool. I've been a trader for 20 something years, and I've always based everything on trend trades, and trends come from fundamentals. And that's why you need to do fundamental analysis of macroeconomic data. Well, it's pretty complex. So it's nice to have a tool like QuantBox that automates this process. Yeah, automates the process. Why do all the work yourself? Okay. In fact, what we do is from different government databases, we get things like GDP growth and the change, inflation and the change, unemployment levels and the change, interest rates and the change, and compare and contrast between economies. So you can see very quickly the difference between Australia and New Zealand. Very cool. You also see retail positioning, institutional positioning, seasonality, technical analysis, scores it all up, does linear projections. Wow. All in an automated fashion. Pretty cool. This is what our commitment to traders report looks like. Easy to read, really well organized. You can do your own research like this. Here's research on inflation. You could compare different countries and their levels of interest rates and inflation, like just really epically cool. But nonetheless, swing on by quantbox.co. Start with a trial. It's less than $8. You can look around, you can play with things for 7 days. But there's also like a 16-hour video training course on macroeconomics. And I think there's like a 2-hour course on statistical analysis using QuantBox. Oh my gosh, that is a lot. Plus, you can attend these sessions live. That being said, let's get on with it. Welcome, welcome, welcome. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money, cannot afford to lose. Okay, cool. There's the macroeconomics training course. There's the QuantBox training course. This is where you attend our live sessions. Easy, clean, noise. Very cool. Anyways, let's log into the database. Let me get the right Gmail. Okay, taking a look at the market. Bitcoin is up. S&P 500 is kind of flat. Well, one of the reasons Bitcoin might be up today is the United States was downgraded by Fitch. I think most people are laughing hysterically, but nonetheless, it's not good news. But it is pretty dumb. Not that they were downgraded, but like just out of the blue, somebody woke up at Fitch and said, "Yeah, we don't like it." Why today? Seems as random can be. So, anyways, they've made a laughing stock of themselves on Wall Street. Ultimately, probably won't change anything, but it's not good news. So, anyways, so if you thought, well, that's the end of the U.S. economy, and you wanted to own Bitcoin, maybe that convinced you to finally buy some Bitcoin. But nonetheless, we're still below 30. So that's not actually that big of a move. It is relative to everything else, and 2% is. But we were well above 30,000 not long ago, and we've been in a downtrend. So ultimately, Hmm. Looking over here, we are above 4.0 now on the 10-year T note. Holy smokes. Okay. Gold under 2000. Oil still stuck here. We've been at this price now for what, 3, 4 days? Remember a week and a half, 2 weeks ago? I guess 2 weeks ago, we were down at like 72 and 73, and we had a buy with a target of 80, and we blew past, we struggled to get to 80. We got to like 79 and a half 3 times and pop right through 80 to 81, and then it stopped at 81. So anyways, there's a history of the world. Has anything radically changed medium or long term? No, medium term is bullish, bearish. That's that. Now, like, think about some of this stuff. The VIX is up 14%. Like, I don't understand that. Well, people are worried about the S&P 500 falling. They don't want to exit their trades. So they're hedging using options. In this case, this is how the VIX is calculated. So it's looking at options on the S&P 500. So if you were bearish on the S&P 500 but didn't want to get out of the trades because these were long-term investments, well, then you just buy options to protect yourself from the downside. And because people are suddenly buying a lot more of these options, they must be worried. Therefore, you can see daily up a lot and weekly up quite a bit. And that's not good. That's risk off. So anyway, so like things like that are happening. I love that because it's factual. It's behavior. They're not selling the S&P 500, but they are buying options to protect themselves. So something is happening. Money is being deployed. Considerations are being made. So you can put that into your analysis. How does that make you feel? Take a look at our scatter plot. Okay, there's that Bitcoin. You're like, what? Yeah, it's way out there, trust me. Which is interesting. Like, that is so far off the chart that we can barely see it. I don't know if you can even see it. Oh, no, no, let me bring it back. It's so far off the chart you can't even see it. But what does that mean? Well, because it's to the right, QuantBox expected it to be up. And then because it's up to the, up, that means it has gone up. So it's gone up and was expected to go up. And so it's right there, very bullish and expected. So everything up here is right as rain. Everything down here is right as rain. These things over here are kind of neither here nor there, like they're up 0.5% or down 0.5%. Maybe nobody cares. It's these outliers. So like the Japanese stock market's down quite a bit. German stock market's down quite a bit. UK stock market down quite a bit. NASDAQ and S&P, yeah, they're starting to turn. QuantBox, is bearish on or bullish on them, but they're coming down a little bit. Cool. Now, why do we care about that? Well, because as technicians now, we might be worried about, let's say, the S&P 500. Okay. And I have lines in the sand that say this might be the top. It could be the top for now. Like not that, not like a top, but definitely be ready for a pullback type price. And I said that this could fall as much as 10%. 10%. That's not a small prediction. And I'd be cool with it. I'd buy it. I'd buy it down there. But nonetheless, we have to make our decision. Will it fall 10%? Is this the beginning? Okay. Are we going to do something like this, for example, in the next 3 weeks? I don't know. That seems like quite a stretch at the moment. But it is interesting. We are consolidating at the right price for that. Okay. So you might want to trap it now in a lower bound. So we got here and here. What's the next move? Plausibly, what if it did something like this? Would it be important? Oh, yeah, technically, that's very important. Mhm. And is that partially going to be due to the Fitch thing? Well, one of the things that I think is going to be required to make a meaningful pullback is something breaks. You know, something breaks in the system. Something just can't withstand consistent interest rates. Yeah, let's say either the velocity of interest rates going up in the United States or maintaining high interest rates. Yeah. Remember, the Fed has increased their balance sheet over time, and their borrowing costs have doubled, basically. Huh? Hmm. Makes things expensive, makes money expensive. So, anyways, it's kind of interesting that we hit a very specific target, 45.96. And so far, we've tested 1, 2, 3, 4 days in a row, and now we have a nice big drop. So we do have the right tools, don't we? That was the expected July top. Cool. Right on. So now, if it breaks down this way, yeah, it could be significant, 7 to 10% decline in the stock market. And then somewhere along there, the narrative will turn negative. It's not there yet, but all of a sudden, everything you hear about on TV is bad. And you're like, well, 2 weeks ago, everything I heard on TV was good. Uh huh. I got to move my chair around. Ah, that's so much nicer. Okay, so anyways, watch that. Look what's going on in the Japanese stock market. Ooh la la. Okay, that's a big move. So when the Japanese stock market falls, what happens to the yen? The yen gets strong. Here's the yield on the 10-year Japanese government bond. Okay, I just want to show you where we are relative to a year ago. Year ago, we were at 0.16. Then one day, the government said, we'll allow it to rise. See, it slowly went from 0.16 to point 0.2 to 0.25, 25, 25, 25, 25, 25, 25, 25, 25, 25. And then on one day, the government allowed it to go to 50. So here it doubled to 25, then it doubled to 50, and now we're in a new regime where it can go above 50, and we just instantly go right now 0.63. Okay. And when this goes up, it's bearish for the stock market, bullish for the yen. Yeah. All right. Just looking at some of that key data. Cool though, right? So now what? Yeah, good question. That's our job. At least you're asking the right questions. Okay, maybe identify some levels of support. Well, how about like that? Maybe a top. No, no, no. Well, I don't know. Kind of hard here. Huh? Yeah, I'll leave it at that. So if the stock market wants to come down there, that'll change the yens. Check this out. Is this also a resumption of bearishness? I'll remind you that this is the best selling pivot for the month. If you're already a bear, that's how you use this tool. It's a, it's technical analysis. So the reason I have a big fat gray line here is that's a projected top for a bear. We don't know if it's going to be bearish, but that's what a bear would do. This fat line doesn't mean anything. This big gray area means something completely different. So it really comes down to what's the meaning of this line? That's the best selling price if you're a bear. That's all. So what is a bear thinking? Well, they love that this worked. So they are definitely thinking reversal. And they're probably going to have this as a strategy this week, and then this is a strategy next week, and then eventually get down to well, we'll call it below 7,000. I don't know what the bulls are going to do, but that's what the bears are thinking over the next 2 or 3 weeks. Okay, is that going to be good for the Australian dollar or bad? That would be bad. So we can compare Euro Aussie. Okay. There's a trap and break strategy. What do you think of that? Possibility? Could be a rabbit, could be. Aussie Kiwi. What would the trade plan be here? That's what it would be. Aussie Cat. Okay. Got to be careful. Look left. Okay. If this lower low fails, it could be a big up. There could be a big change somewhere. That's a big deal. Doesn't mean you can't trade it. You just got to be aware of it. Because if you're aware of it, you'll change your behavior. Maybe you'll manage it a little differently. Maybe you'll move your stop a little more quickly, or maybe you'll cut your lot size in half and double your stop. Okay, maybe you'll just trade half the lot size. Maybe if you take it, you decide, well, you're taking all this risk, so you better hold it for a longer period. Go for more aggressive targets. But if you don't recognize it, then what? You just trade like it doesn't exist, and that's poor. If you're aware of it, it's kind of like the Hawthorne effect. What this means, if a subject knows or even just feels just thinks they're being watched, the subject changes their behavior. Even if it's not true, you're in an empty room all by yourself, and you're like, somebody's watching me. You change your behavior. So if you see the support to the left, I would hope you would change your behavior. Let's say the ones that survive change their behavior. If you ignore it and just go through for it, you don't have the skills. We'll take a look at Aussie versus US dollar. Yeah. Now I do want the dollar to be strong. Remember, this time of year, I was wrong all July. That yen, that dollar was quite weak most of July. Now we're into August and it's strong. And I'm like, no, okay, well, that's what yeah, 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 that's normal. Totally normal. So, anyways, we're down for several days here. The target is this double bottom. I'm going to declare an M3, M1 type play. So, the last move on this was probably like this. And then we're here, and the charts don't suggest lower. Not yet. All you can count on is maybe one more trade down, which I'm fine with, because what I would like is by this period, I'd like to target up here. You're like, what? You'd buy it at 65 and go for 75? Yes. But to be honest, I wouldn't have a price target. I'd have a time target. Oh, oh, right? Because you have to make a decision. It's either price or time. So if I'm not going to make a price target, oh, weird, it won't draw. Interesting. Uh, it won't draw right there. That's weird. Found an Easter egg. Why won't it draw in that one spot? That is cray cray. You can draw there. All right. Anyways, so if it's not price, what time would I get out of an Aussie dollar long if it happened? Like I'd take the shot. I don't know if it'll get there, but if my target isn't this price or this price or this price or this price or this price, Denise has got it. Yeah, December 12th. You're like, why is that? Well, it ain't quantitative, son. I don't know. Join an investor boot camp. Come on. Anyways, yeah. Why? That's my alpha. I made it up. All right. Cool. Aussie Swissy. We drew all these lines. This might be resistance. This might be resistance. This might be resistance. We had a giant green candle and it acted as resistance. How funny is that? Oh, yeah. Trading's fun, huh? Yeah. But anyways, look, yeah, it acted as resistance. Oh, faux show. Quite a bit of volatility there, probably in regards to interest rates not rising. Okay. And I hope that discussion we had on the media expected the RBA to raise interest rates. And I freaked out when I was asked a question about it. I'm like, what the hell are you talking about? Who said this? They who? Oh, it was on this website. It was on this calendar. I'm like, oh, and I melted. Remember, I literally melted. I'm like, you're kidding me. Let's look at the facts. And I pull up QuantBox and like, they ain't gonna raise. I mean, they might because they can do anything they want, but that's not what they told us. That's not what the facts say. So I hope not being right isn't necessarily the issue here, but I hope that was a lesson where you don't even lean on QuantBox, right? Like that's just well, we got that information and QuantBox displays it. But I hope the underlying lesson there is if you do the research, you can be smarter than most, but you have to do the work. Like Harvard gives you this lantern when you graduate from undergraduate school. And they give you this lantern because now you're illuminated because you understand how to get the truth. You're illuminate because you understand the truth. And yeah, maybe it's because you're rich and good looking. I think it's more like because Harvard's a very tough school and they teach you how to do research and they have more research resources than any other school in the world. So they drive this idea like get the information, learn the truth, don't just rehash somebody else's thought, get the truth and you will be illuminated. And I really like that. And I thought that the discussion we had the other day where QuantBox just gave us the truth. And some, you know, 28-year-old journalist at a media company is not going to give you great financial advice. So we got to do it ourselves. QuantBox at least automates it, but will it will it make you look at it? Will it make you think about it? Will it make you incorporate it into your trades? No, you have to do that yourself, huh? But at least we have truth, and that's a pretty good start. Okay, and Euro Kiwi for some reason. All right, cool. So we'll leave that. Do a couple commodities, and then we'll get out of here. Okay, still breached above the upside. So we hit our July target. As you know, our August target is 90. Golly gee whiz, Batman. That's a long ways away. Uh-huh. But we do have resistance coming up. Remember, not long ago, we were talking about Goldman Sachs targeting $100 on this thing. The narrative is that we're not going to go into recession. Okay. What do we know about this on this time frame, on this daily time frame? It's definitely 100% bullish. Can't even argue it. It's bullish no matter what you do. And but what would be healthy for bulls is maybe a drop back down to 79 or 80 and then we drive it up to 90. Okay? I want you to think of it this way. If you bought down in here somewhere, and that was our trade plan and it barely even dipped, but if somehow you got in it, you look at this and you're like, "Well, I'm going for 90 now." This is an out of position trade as you know, and you know how to trade it, and you're like, "Well, I'm going for 90, that's it." And you've made a decision not to get out. Okay. Now, what about bulls here? You have to decide not to buy it. That's the two decisions a bull would make is not take profit, and the other one, not buy it. Now, why would a bull not buy it? The price is high. You need a dip. If you're going to survive the game, you only buy dips. That's it. You find a bullish trend and you buy a dip. You find a bearish, right? Drop, a bearish trend, you sell a rip. That should be 90% of every trade I look at in your trade history. You're selling rips or buying dips. And so, like when we do stop, look, and correct sessions and stuff like that, or if you use Aiden over at tradeplans.ai, I see very often people throw down trend trades in a range. What we should, because, oops, because like even this is a range, and even buying a dip like this is a very mediocre trade. When we do our analysis technically, instead of looking for like, I want to buy a dip type scenario, you should start with, is it trending down, or is it trending up, or is it trending sideways? That should be the first part of your analysis. I actually wrote a book about that, quite literally about that. You start with that, and what's the direction of the trend? And then what's the speed of that trend? Is it a confident bullish trend? Is it a not confidence? Is it slow? Is it fast? That kind of stuff. And then when you got all that lined up, then you look for entry. So I would even argue that a pullback like this is actually quite mediocre. I think what would happen, or let's say even more likely, is we get this up and then a sort of a correction. In that case, the bulls that bought low and got it an amazing trade. Maybe they bought it at support at 67 or 68 or 7, all right, or they bought this pullback. Great, good for them. And they're going to let it rally all the way to 90. Good for them. Very good trade. Doesn't mean you have to buy it three-quarters of the way through the trade. So your job is, ooh, I like this. If it pulls back, I'm going to drive it up. If it comes up here, I'm not sure. Okay. Anyways, gold. All right. Let me get rid of some of this. Okay. Instead, I'll throw down insert indicators, custom, price action pivot points. Yep, yep, yep. Pachow, pachow, pachow. Noise. All right. So gold not in an uptrend. Okay. The best selling price of the week was this. Not this, not this. Okay. Not even this. Okay. Based on the rules of engagement that you learn at investorbootcamp.com, that is the price, 1970. And if that is the top, then 1930 is the bottom. So if that will work out, we don't know if it'll work, but that would be the strategy. Then the next tactic would be you take it down like that. Okay, that's gold down, dollar up, stock market down, Bitcoin down, maybe even oil down, because it's what we're kind of measuring is aggregate demand destruction. You're selling gold to get cash. Why do you do that? Gold is not easily converted into rent. Gold is not easily converted into bread and milk and eggs and butter. Cash is. So think of it in just terms. Gold could be argued as a store of value, and cash could represent a medium of exchange. And you're trying to choose, right? Are you trying to make money? Or you're trying to spend money. Both are forms of money, but one is good for storing. One is like you could store gold ingots for 30 years and be fine. You guys ever watch Narcos? The first year, the season where Pablo Escobar is on the run. So he goes to various places where he's stashed millions of dollars in plastic bags, all air locked and everything. And he gets there, and it's still in the Colombian jungles and humidity and all that kind of stuff. Even though they're in the big plastic bags, they open it up and it's all rotted. Cash is not a good store of value. If it was gold bars, it'd be perfectly fine. Pablo would have had tens of millions, maybe 100 million. No, he had nothing. All his money rotted, right? So, anyways, so you got to like, are you going to store it in gold as gold, but it has very little use? Or are you going to like convert it here where it has no intrinsic value, but is an excellent medium of exchange? Okay. So, anyways, I don't know. Cool. Cool. All right. So, I will. Oh, here's the Bitcoin. Okay, big pop in Bitcoin. There was a big drop and a big pop. I don't know why. I suppose I should have that news, but I don't. I wasn't. I watched it on my charts behind me, but I was doing other things and stuff like that. And I'm like, oh, that's curious, but never followed that up. I don't know if it was Bitcoin or related or crypto related or something else, but I'll check it out. With that being said, we got ADP today, in about 1 hour. That'll be the big thing. So I'll see you when I see you, perhaps over at Forex today. Hey, YouTubers, stop lurking. Kick down, come clean. Don't be a holdout machine. You should be in these live meetings at 6:30 in the morning. It's now almost 7:15, but certainly by 7:30, probably by 7:20. This video will be up inside QuantBox for other QuantBox subscribers. So come on, act like a professional. Visit quantbox.co and subscribe. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. I'll see you again soon, I'm sure.